Hey everyone, are you looking to buy your first home in the Northern Virginia area? Whether it's a townhouse, condo, or a single family house, we're going to be going over several steps that you can do to prepare yourself to be in the best position to buy a home. Today we're going to be going over the types of homes that you can buy, the areas that you can buy in, and the number of loan programs that you can use in order to put yourself in the best position. So let's talk home types in the Northern Virginia area. You're going to have three primary options whenever you are going to buy a home in Northern Virginia. It's going to be a townhouse, condo, and single family home. Now there are pros and cons to each type of home that we're going to look at here, and we're going to start with the condos. Generally, condos can be more affordable than a townhouse or a single family home, depending on the area that you're looking in. A positive is that the owner is not responsible for traditional maintenance like the roof and landscaping that you would be if you were in a townhouse or a single family home. And it often allows you to live in areas that have more attractions nearby. So think of areas like Arlington or Alexandria with lots of restaurants and shopping, where normally if you're in a single family home, that could be upwards of $1 to $2 million. But in a townhome or a condo especially, you can get into those areas at a cheaper price point. Now the downsides of a condo is that you are gonna have HOA fees. So it's something that everyone has to deal with. There's a lot of movements out there to defund the HOA. But HOA fees are variable, and they can range from $100 to up to $1,000 on the top end of things. So the age of the condo association, as well as the buildings and the amenities, are all going to factor into how much your HOA charges per month. So whenever you are looking into purchasing a condo, one of the main things you have to look at is the HOA itself, the different rules and regulations that they have, as well as how much their HOA fee is and what it covers. Next up is townhomes. So these are going to give you a little bit more space while keeping it more affordable than a single family house in most areas. Townhomes typically come with more space than a condo and offer multi-floor layouts with a small backyard. Sometimes you can even get a garage attached to these townhomes. Additionally, the HOAs are generally going to be lower compared to a condo. Some of the downsides of a townhouse is that you are going to have a shared wall with your neighbors. So similar to a condo, privacy is going to be a little bit lower than you are going to get in a single family home. And you are going to have more upkeep in a townhome than you would for a condo. Townhomes can also be priced a little bit higher than condos depending on the area that you are in, because you are getting more space, a little bit more room to grow. Last but not least is a single family home. Everyone wants the single family home, so this is the white picket fence, the American dream. Pretty expensive in our area. The pros of the single family home is that you're going to have the most space and privacy compared to condos and townhomes. You'll have full ownership of the building itself, whereas the HOA is going to own the townhome or the condo. And single family homes tend to appreciate at a slightly higher rate in Northern Virginia. The downside is your price per square foot is going to be much higher than a condo or a townhome in this area. And then all the maintenance is also on you, which can add up over time. So in conclusion, generally speaking, condos are going to be your most affordable option. Townhomes are going to be right in the center there. And then single family homes are generally going to be the most expensive. Now this is going to heavily depend on the areas that you are looking to purchase in. But those are a simple rule of thumb that you can use whenever you're thinking about what type of home that you want to purchase for yourself. Next, we're going to be going over the most affordable and the least affordable areas in Northern Virginia. Areas that can provide you a little bit more affordable housing are going to be Loudoun County, Manassas, Woodbridge, and Dumfries. So here you're going to find townhomes and single family homes that are priced well for a good amount of space, and they're typically going to be good prices for a first-time home buyer if you're looking to expand a little bit. Now, some more expensive areas in terms of price per square foot are going to include McLean, Vienna, Arlington and Alexandria, and Reston and Fairfax. So Arlington and Alexandria are great for condos and single-family homes. You're also going to find townhouses there. Like I mentioned, pretty much every home type is available there, but they're much closer to DC, so you're going to have higher prices associated with those two areas. McLean and Vienna are known for being a little bit more, family oriented in terms of who's moving there. Next topic we're going to cover is loan programs that every first-time home buyer should know about. Now, before I go into any of these, always speak to your dedicated loan officer before you make a decision on anything. They're going to be able to give you the most advice and guidance when it comes to choosing the option that's right for you. They're also going to have all of your financial information that will go through their application process so they can tell you what your numbers are actually going to be. Typically, you don't want to take advice from your realtor in terms of what loan options are best for you. That should always come from your lender. FHA loans are a great option for first-time home buyers. Generally, they're going to require only 3.5% down for your down payment and have easier credit requirements in order to be approved for that loan. One downside is that mortgage insurance is required. So this is going to be called PMI, or private mortgage insurance. It's a monthly fee that's added to your mortgage payment when you put down less than 20%. Conventional loans, these are the loans that you typically will think about whenever you think about mortgages. So these generally have 20% down, lower long-term fees, but again, you will pay PMI on a conventional loan if you put down less than 20%. VA loans are good for military service members. They are 0% down, no mortgage insurance, and again, for veterans and active duty military. In Virginia, one thing you should absolutely look into, especially if you're a first-time home buyer, is Virginia Housing Development Authority loans. So these are VHDA loans. They are geared for first-time home buyers and can offer down payment assistance to those that qualify. The one thing that you do have to keep in mind is that they will typically have income cap requirements. So to sum it all up, those are the main types of loans that you want to look into when you're getting ready to buy a house. But again, like I said, always talk to your loan officer for the source of truth for choosing which loan type is for you, because they're going to give you way better information than any real estate agent is going to be able to give you. Topic number 4 is credit and financial prep. What lenders are typically going to look at whenever they go to approve you for a loan is your debt to income ratio. Generally speaking, again, talk to your loan officer, but they want to see your debt to income ratio be 43% or lower. So what does that mean? Let's do a quick example here. So let's say you make $6,000 per month before taxes. We need to add up your monthly debt payments. So in this example, we'll say you have a car loan for $400 a month, a student loan for $300, credit card payments of $100, and then your estimated mortgage that you're looking to buy would be an $1,800 per month mortgage. So that would bring your total monthly debt to $2,600 per month. So in order to calculate your debt to income ratio, now what we need to do is take your total monthly debt, which is $2,600, and divide it by your monthly income before taxes, which is $6,000. So in this example, you get 0.43, or exactly 43% debt to income ratio. But at least this way you can get a general idea of where your debt to income ratio is at. If you're significantly above that, what you want to start to do is pay down some of your loans, maybe see if you can pay one off in full, pay off some credit card debt. But generally speaking, as a rule of thumb, they will be looking to have that 43% debt to income ratio. And finally, our bonus tip of the day. It's a pretty easy one, pretty straightforward one, but negotiate, negotiate, negotiate. This is where your real estate agent comes in, and having an experienced agent who's going to fight for you is very, very important. So there are a lot of different things that you can do to save thousands of dollars at the closing table that not a lot of people know about. So the first thing is you can ask for seller concessions. So you can ask the seller for X amount of dollars to help cover closing costs. So you can do this for potentially a property that has sat on the market for a long time, and you want to get, let's say, $5,000 from the seller to cover some of your closing costs. So in that example, you'd still pay, let's say, $300,000 for a condo, but you would ask them for a $5,000 seller credit, and that can go towards your closing costs. And last but not least, but look for first-time home buyer grants. Different programs like VHDA and some FHA loan programs have buyer grants, and lenders will offer these. It depends on whether or not you're going to qualify based on your income and your specific situation, but always ask your lender and your loan officer about their buyer assistance programs. So let me know, as a first-time home buyer, what is one thing that is stressing you out about buying a home? Drop it in the comments below and I will respond to those, hopefully point you in the right direction. If you found this video helpful, please like and subscribe, and keep an eye out for my next videos about these topics more in depth.